Welcome back all. CA Lalit Bansal, Convener JB Sarir Sakal, CA Vijay Modi, Deputy Convener, CA Anita Sarmadi, CA Bhavesh Shah, all the dignitaries, seniors. Topic on TDS. The returns have been filed. Topic is delayed. Website is not working. Don't ask me when it will start working. New websites, new problems. CS should always be busy. They should keep on trying, like our exams. Right? Topic per se, there are 51 slides. Whenever you want me, tell me and stop. If you want me to continue, I can speak for 6 hours. When you want me to complete, I can complete within 45 minutes. I'll cover everything. Give you the entire highlights, what is going to come, what has come, what is going to continue. But all will be in short. Whatever you want me to cover in detail, I'll continue. At the end, when time permits, I'll share you with one beautiful utility which will help you in doing your tax audits. If you will sit till the end. That is the condition which applies. So topic per se today, that is starting with a disclaimer, which always I put that this is my whatever today we are going to discuss, it is only my opinion, neither JB Nagar Study Circle, neither institute, nobody is responsible for it. It is purely for the discussion purpose. And if you want that anything should be added in this, which will make this presentation more meaningful and purposeful for discussion, presentation will always be shared with you. We will cover this, what were the changes in what are the changes are there in 2025 Act, what is continued, and how 2025 Act, what we have to do in the 2025 Act. So basically main changes is first is that for this year, we have to remember now that is the tax year. That is why making the payment. Now, since we have already filed the returns, while making the payment now for TDS, you have to make the payment for the tax year, that is 26-27. But for the income tax, when you will be making the payment, please don't forget that when you are making the payment for the last year, you have to make it for the assessment year. Don't select it as a tax year. Though there are the provisions to make the challan corrections, but there will be some issues to take the credits and to make the corrections because our clients are such that they come on the last day. And on the last days, we make such a mistake that give all the works to our article clerks and all, they make the mistakes, and then after that, it becomes very difficult to rectify the mistakes. One good thing has happened, that sections have now been converted into tables, that you have to refer now to the table because people were very happy. In last 60 years, we had 192, 193, 194 that had reached to 194T, UV to Z were remaining. But we were such that income tax department had kept that you give the suggestion that something is remaining to be added, but we didn't give the suggestions so that they came up with the tables. But now while making the payments, you have to select the codes now while making the payments. And what are the codes we now already know that what codes have to be selected while making the payments. That is a big change. These codes are effective from April 21st, that is 1st April 2026 onwards, and the forms also have been replaced. That is, those who have not filed the TDS returns in the last year, they have to use the old forms, and now we will be filing the forms for the tax year 25, 26, 27. You have to use the new returns, which has been replaced. The forms number have been changed. The tax certificates, etc., also will be replaced, and there are changes in some filing system. This is a topic of discussion today. That is what is covered. Now, criteria for application of TDS, that is when the TDS has to be deducted, what is the charging sections, etc. What was there in 1961 Act, that remains the same. There is no change in that. 61 and 2025 remains the same. That is for individual and HUF. If your turnover crosses 1 crore, and in case of professionals crosses 50 lakhs, you are mandatorily required to deduct the TDS. In case of individual and HUF, and that's. And in case of firms, companies, and governments PSU, they are mandatorily required to deduct TDS. And in case of non-resident payee, all these things remains the same. But in case of other payments, that is, if you have purchased the property, if it is exceeding rupees 50 lakhs, then you are required to mandatorily deduct the TDS irrespective of the turnover. Property purchase, if you have made a rent payment which is exceeding 50,000 per month, in case of residential property, etc. Contractor's payment in case of personal expenses. You have purchased a house and made a payment to a contractor which is exceeding 50 lakhs rupees, then also you are required to mandatorily deduct TDS. That is remains the same. But salary, in case of a salary, if it is exceeding, tax is required to be deducted. If it exceeds the limit, then it is also mandatory. Then these provisions does not apply, which was already there in the 1961 Act, that continues in the 2025 Act also. Then about what are the changes which has happened? It is said that it is a simplified structure. Structure always is simplified, which we have already seen in the GST. Now let us see that how this is really simplified, because 2026 has become applicable. To some extent, it will be simplified. Let us see that TDS and TCS rates, earlier taxpayer had to deal with many different rates, which had caused confusion and errors. Now these rates are grouped into fewer rates. That is, rates have been reduced to fewer rates. That is, three big benefits has happened. As we have simplified rates, that is 1%, 2%, 5%, and 10%. There are no different rates. So mistakes, chances of being a mistakes will be lower. The automation which is there, because accounting software, ERP systems we have, AI we have, they can automatically handle all your TDS rates, where you have to deduct what has to be deducted. Automatically, it gives you that once you deduct, once it is auto-programmed, it will tell you that this much TDS has to be deducted if the entries, accounting entries are made properly in the accounting software, or it is mentioned in your TDS software which you are using it. So this is one of the biggest advantage. These are the three big benefits of the new system. Secondly, we have a dedicated system, that is only three sections are there. 392 to 394, 395, that is there, wherein the sections have been dedicated. We had entire section chapter. The chapter was there in the 61 Act, but here you have a dedicated three sections, that is 392, which deals with the salary related provisions, then which has been replaced with the tables. What it says that now the sections has been divided, sections have been divided, wherein business and professional payments has been clubbed, property and assets related payments has been clubbed, financial instruments related payments has been clubbed, and special categories have been clubbed. So we have these 4 categories which has been clubbed. And then we have finally e-commerce transactions. So these are the 5 broad categories wherein the sections has been divided. So if we see that in business and profession, we have commission and brokerage, works and service contracts, professional and technical fees, directors remuneration, and business or perks, which has been given. In property and assets payments, we have rent for equipment, sale of property, and royalty and license fees. In financial instruments, we have interest on securities, dividend payments, interest from mutual funds, REITs, etc. And finally, special categories, we have insurance payouts and high value goods purchase. So in this way, the categories have been divided. Based on this, rates also have been classified. So this is the biggest advantage of 2025 Act. So here if you see, if you select it properly, the rates have been classified. Then finally, e-commerce transactions are dedicated sections. What we discussed in the earlier section, that is a virtual digital asset. And other related payments, that is, we have clear threshold section has been given that what has to be deducted, how much rate will we apply in that sections. Then what has changed? That is old rules under 192 and 192A, we had separate rules were there that has been combined into a single rules, now merged into a single section, that is 392. So you have to remember now, section 392 means salary, everything covered in that, but then we have sub tables wherein the same calculation methods continue in the sections, but everything in one place. Core coverage is there. In that, salary, allowances, valuation of perks, employee paid, taxes on perks, retirement benefits, gratuity, everything you find it in one single place. The section 392 deals with what related to employee payments. You will be finding it in same sections. In earlier, you had to find it, you had to search in various places. The biggest advantage here is that you have to, if you have find it any problem, the rules will give you that how by each method they are given with the examples that how you have to calculate it. So in future, there won't be any problem, because the biggest problem here is when you have to deal with the employees. When the salary deductions happens, the employees, the genuine taxpayers of the country, they always come up with the problem. My TDS is not deducted properly. They want various methods. They come up with the various methods of tax deductions. So they give you alternative methods. The my tax has to be deducted in this way. My tax has to be deducted in this way. But here now what has happened in the rules they have given that this is the formula which has to be adopted with the examples in the rule. So it says that suppose if the gratuity has to be calculated, what is the method of exemption should be granted? In the rule, it has given the example that in this way you have to calculate the gratuity. This will be the examples which will be, this will be the exemptions which will be available. The formula and the method has been given. So this is the biggest advantage which was not there in the 1961 Act. Then, wherein employer can choose to pay the tax on certain box only. So where is the what will be there? What will be exemptions which will be available? There also the examples have been given. Deferred tax option for startups, ESOPs, that is also have been given. That is when ESOPs will be taxable, at what value it will be taxable. There also the examples have been given. That is what will be the tax rules which will be applicable for PF withdrawals. Then what the tax will be applicable for superannuation, there also the examples have been given. So this is the biggest advantage. So what was happening at the time of calculation methods, earlier the formulas were not applicable because each and every time different formulas were made applicable. So this is the biggest advantage. So easier to for the employees to manage tax on salaries and perks, clear rules to monetize the benefits of ESOPs, and employees will be getting the flexibility while dealing with the retirement and equity compensation. So this is the biggest advantage. Then that is other things, that is 193 section was there. That is we dealt with the interest bearing debentures. TDS on interest payable on debentures to a resident individual's actual threshold limit was 10,000. That is continues to be in the new act. That is now covered in 393(1). Limits remain the same, only the section number and the table number has changed. Then 194, that is TDS on dividend, that is now become section 393(4), table number, serial number 10. So if you have in this, you see the serial number in the section has been changed. The section remains the same, but it will come in the table. There is no change in that. So TDS in respect of life insurance policy, what had happened earlier, it said that 194 DA section was there, which says that TDS deduction was at the rate of 2% when the amount was payment was made, which was exceeding rupees 1 lakh, more than 1 lakh or equal to 2 lakh. But now it says that TDS deduction will be at the rate of 2% when it exceeds rupees 1 lakh and it is not less than or equal to 1 lakh. It has been clarified. So now when the payment will be made, which is exceeding 1 lakh, that is 1 lakh 1, then only the TDS will be required to be deducted. So this is given the purely the clarification has been given in the new act. Then about TDS on payment of interest other than interest on securities. That is thus 194A. That is normal TDS sections. That is, in that these TDS provisions shall not apply for interest credited or paid to any banking company under the Act, Banking Regulation Act, any cooperative society engaged in carrying out the business of banking company, including a cooperative society. Wherein what the amendment has been made is the exemption is limited to any banking company only. The expression any cooperative society engaged in carrying on the business of banking company, including the cooperative land mortgage bank, has been omitted. So this section clause has been omitted in the new act. Then there were two separate clauses, that is clause number 9 and 9A, interest on compensation awarded by the Motor Accident Claim Tribunal. TDS on interest deducted on actual payment. What was happening? It was due to be deducted on actual payment. Now it says that 9 and 9A clause has been merged. That is, now it says that TDS on interest will be deducted at the time of actual payment, not credit or. So this has been clarified now. So whenever the payment will be made, at that time TDS will has to be deducted. Then TDS on payment of commission or under brokerage. The new law says that definition of professional services excluded advertising. So this professional services and expanded, it says that now advertising will be covered under the category of professional services. So earlier the rate was 2%. Now you have to see that advertising has been shifted to professional services. The TDS will record, the rate will apply accordingly. They expanded the definition of rent. What is 94 IB said that earlier 194 IB, the definition of rent included any payment for the use of land or building or both land and building. But the new act says that definition of rent expanded to cover the payment of use of either separately or together any land including factory building or land appertaining to the building including or factory building. So we have to see that whenever the payment is made, you have to deduct the tax accordingly. So this is the definition which has been modified. Then about changes in the TDS provisions. That is TDS on payments of compensation on any acquisition of compulsory acquisition of property. Because what happens when there is a compulsory acquisition of any property, TDS is deducted. It says that compensation on acquisition of any certain immovable property, old law said that TDS was to be deducted at the rate of 10% at the time of actual payment. But now it has been new law says that TDS has to be deducted at the rate of 10% earlier of when the amount is credited to the account of payee or actual payment made, whichever is earlier. Then 194N, that is TDS on cash withdrawals. What it says that TDS on cash withdrawals, old law says that a person if he has not filed the returns for the last 3 years, then the TDS was required to be deducted at a higher rate. Now that provisions has been amended, that it says that TDS on cash withdrawal is applicable when the amount was to be withdrawn from the bank. That is, if the person has withdrawn 20 lakhs but 20 lakhs but less than 1 crore equal to 1 crore or 3 crores in case of cooperative banks or cooperative societies, TDS rate was 2%, and less than more than 1 crores at TDS or 3 crores in case of a cooperative societies, then TDS rate was 5%. Now, new law says that it is made a simple rate, that it will be a flat rate of 2% rate once withdrawals process more than 1 crores. This has been unified rate. Then about certificate for a lower rate. So earlier in the earlier rate, it was restricted and you were not supposed to apply for the lower rate of TDS. That is, the restricted sections were there. You were restricted that for some sections only you were able to apply for the lower rate of TDS. But now it says that you can apply for any sections of TDS. You can apply for the lower rate certificates. What was happening? Suppose in case of a partners, we were paying the salaries to the partners. Now 194T was there. In that case, in the earlier law, you were not allowed to apply for the lower rate certificate. But now you are able to apply for that. Similarly, 194Q, that is TDS on purchase of goods, that was also not permitted in the earlier law. Similar case, in this case, now new law for any item you can apply for the lower interest, it is now permitted. So section 197 now becomes section 395, and you can apply for any item for lower rate of cash. That is now extended to all specific sections. Then about compliance and reporting. That is, earlier you had two separate sections, that is 206AA and 206CC, wherein if a person does not have a PAN, then you have to deduct the tax at the higher rate. Now this has been unified because now TDS and TCS has been covered in section 397(2). It says that there is no separate panel sections, unified PAN compliance in a single section. So you will have to deduct the tax in the both unified section. Then about TDS correction statement. Earlier you had the limit, that is you were able to file TDS returns for a period of 6 years. If you have filed a return, then the correction statement you can file, you are able to file it up to a period of 6 years. But you see the last in 31st of March, the restriction was made up to 2 years. That also continued in the new area. So up to 2 years, you will be able to file the correction statements. So that is restricted is so update there. So now it is 2026-27. So up to 31st March 2026. So prior to 2024, you will not be able to file the correction statement. So whatever is demand is there, you have to pay that demand. So that demand is final. You have to pay that demand, and that will be closed. So a similar case in case of TCS returns also, that demand is fixed and that demand has to be paid. Then about section 222, that is Income Tax Act 1961, there was, suppose if any demand TRO has issued any notice, and in that notice, suppose there is some mistake which has happened. So there was no power with the tax resident TRO to cancel or modify this notice. But now 2413 notice says that TRO may cancel the certificate if considered necessary and may correct if there is any clerical or arithmetical mistakes. But it explicitly prohibits the challenges to the certificate or correctness as many stages. So it says that the officer has the power that it can rectify if there is any arithmetical mistake. So that has been provided. Then collection of TCS. That is what happens in case of white goods. That is TCS has been introduced. That is 1% TCS. Earlier it was that any motor vehicle, that is if it is exceeding rupees 10 lakhs, you are required to collect TCS at the rate of 1%. And in case of white goods also, that is white goods means any purchase of luxury goods which is above rupees 10 lakhs, you have to be required to deduct collect 1% TCS. Now it says that provision has been amended that when the amount is debited to the account of the buyer or when the receipt of payment, whichever is earlier, at that time TCS has to be collected. Earlier what was there? When the receipt of payment was there. Now it is amended earlier of this collection or debit to the buyer, that is to be certain. Then no scheme out notifying the provisions of non-deduct trustable. Till date, what was happening? That a person who has deducted the tax and not paid the tax, penalty was there. But a person who was liable to deduct the tax and he has not deducted this and not the payment made the tax, there is no such provisions. Suppose if you are liable to deduct the tax and you are not deducting the tax, there was no such provisions. And now it says that in future, government will come up with that provision that in future, that suppose if a person was liable to pay deduct the tax and he has not deducted the tax, government will come up with a scheme to levy the penalty on that person. That what has to be done, what penalty has to be levied on that person. That is section 399 is come up with that. Then,
sir,
yeah.
Question. Suppose a person has in FY 25-26 professional turnover of 35 lakhs and an FNO turnover of 92 lakhs. So both the conditions for 1 crore or 50 lakhs are not met. So in tax year 26-27, is he liable to grant zero? Both sections are given, like both conditions are given.
No, yes, both the conditions are given.
Thank you.
Then the Finance Act 2026 removes the need of the TAN when the non-resident HUF buys the property from the NRIs. That is, instead of TAN deduction, it will be reported through a PAN-based challenge reporting. So this is there. That is, this amendment is going to be made applicable from 1st October 2026 onwards. That is, slowly and gradually we are moving towards PAN-based compliance. So in future you will see that suppose if these things becomes applicable slowly and gradually in future, TAN may be replaced with the PAN. So that let us see that if this happens, the TAN may be a past event in the near future.
So would rent paid to the non-resident landlord?
195 provision.
That's 190.
Yes.
Right. He has to have a TAN.
Yes, he has to have it. Then filing of declaration for the non-TDS with the depository. So what has happened, the one provision is that centralized filing has been introduced. That is, instead of providing 15G or 15H, that is now new form number 121. I think now people would have been aware. That is what is form number 120, because people would have started going to the bank, they were not aware about form number 121. So 15G and 15H, every company or issuer investors can file the one declaration with the depository. So this has been was introduced in the Finance Act 2026. Now depositors' responsibility will be there that they have to share this information with the relevant persons paying the income, that is such as dividend paying companies, etc. And they will ensure that no dividend is there is no taxes deducted. This will be applicable from 1st April 27, that is tax year 27-21 onwards. So this will happen for them. So they will be liable to file this form. They will file the acceptance statement, etc. And this will be applicable. This will be applicable from tax year 27-28 onwards. Then about ambiguity on manpower supply. That is, Income Tax Act 2025 says that the definition of the work has been amended. That is to include the supply of manpower to a person. So there was an ambiguity. That is what should be covered under the manpower supply services. Thus, accordingly, TDS has to be deducted only as a payment to the contractors on such cases. That is, says that only what is the payment made for the contractors in such case that has to be considered as a TDS. This will be applicable from 1st April 2026 onwards. Then about foreign tax credits. That is those who are filing the returns. That is basically where foreign tax credit has been claimed. So when you are claiming foreign tax credit, that is what is TDS, which is deducted in the foreign country. So TDS, what TDS is deducted in the foreign country, which is claimed in India. You are required to file form number 67, right?
It's right.
Correct? So that form number 67 now becomes form number 44. So when now it says that this form number 44, if that credit exceeds rupees 1 lakh, then that certificate, that credit has to be certified by a chartered accountant in form number 45. Then only that credit will be available to the SSA, otherwise not. And it is compulsory in case of a companies. In case of companies, that limit is not applicable. For companies, it is mandatory. So if this return is form number 45 is filed, then only the credit will be available. Otherwise, that credit will not be available. So before filing the returns, you have to ensure that this form number 45 is filed. Then only the credit will be available. So this is made mandatory from tax year 26-27 onwards.
44 form number.
44 form number. Yeah. 45 is the certificate from chartered accountant. 44 is the certificate. 44 is the return. 45 is the certificate. So both form has to be filed. So if a certificate is required, then form number 44 and 45 both has to be filed. If certificate is not required, then only form number 44. Clear? Then about foreign tax. Then about this is a new intimation. A dedicated digital file. These forms has to be filed digitally online and ensure that this is the credit is not lost due to non-compliances. Then about certain rules, there are FAQs has been issued. There are certain rules related to TDS. There is condition that no deduction of tax from the income in respect of unit. Now it says that one rule has come, that is 210 rule number. It says that income from units of Unit Trust of India, from which income is paid to non-residents, TDS is not required to be deducted, provided the condition is said it applies to the NRIs and non-resident HUFs holding units of Unit Trust of India. Condition is that no TDS on income from the units if the units were brought either from the UTI using the funds from NRE accounts in India or by remitting from the foreign country. The legal requirement is that it must comply with the FEMA Act 1999 and its rules. Then only TDS will not be required to be deducted. This is mandatory conditions. Then some forms which has been changed, that is lower rate of tax, TDS, form number 13 has become form number 128. Now those people who have already applied in form number 13 prior to 31st of March 2026 and they have already got the lower rate certificate, that certificate is valid till it is not cancelled by the income tax officer. Now how many people have applied and got the certificate? Nobody. Achha, how many people have applied in form number 728 and got the certificate? So that is still under process because website is still not working, it is not been finalized. So form number 16 has become form number 130, form number 24Q, form number 138, form number 26Q, form number 140, 26QD, QC, QD, QE, 141. So this is a consolidated return. So earlier you had to remember this, which form to file. Now it is simple form. There is one form only has to be filed, form number 141. 26QL, that is TDS on virtual digital assets, that is 142. TCS return 27EQ, NRA TDS and 27Q becomes 144, and TAN application is now in 125. But you see that has become more stringent now. When you apply for the PAN, now you have to give an additional document because earlier only with the Aadhaar card you were getting the PAN number, but now one additional document, that is a proof of date of birth, either the passport or your birth certificate, etc., has to be given. Then only it gives you the PAN. Otherwise, no. Then lower rate of 30, this. Declarant PAN has to be stated specifically in the declarant body. What has happened here is, suppose in future, now a agent also will be authorized to file lower rate of deduction certificate, because agent means authorized representative. Any person who authorize the person will be able to file the lower rate certificate, etc. Because in the form 128, if anybody has filed, you'll see a person who is authorized to file, that person's PAN number has to be given. A person on who is filing the PAN, that has to be given, and the person who is representing that PAN number also has to be given. So there are three bodies which has to be given. And what the changes which has happened in form number 128, you see the form number 128, how the process happens. Its law says that once you have filed form number 128, within 2 days they have to clear form 128, they have to issue the certificates. But those who have filed till 2 months, they have not got the certificate. This is the practical issue. Theoretically, it says law says this, but practically till 2 months they have not got the certificates. But simple case is that is you can apply for any income. That is what it says that. Then it can be rejected. That is the common mistake. That is the late application. If you have to give unrealized, because the documents which were required to give that are common. That is, you have to give the projections, you have to give the current year's projections, past 3 years data. Earlier it required for 3 years data. Now it asks for the past 4 years data, and you have to give the demands which is pending. And what will happen now? The data related to your demand, etc. Once the websites become fully active, all your details related to your tax deduction extra will automatically be captured in form number 128. That is what your deduction will be captured from AIS data. Is what is your tax deducted, etc. will be captured from AIS. Then application will be made for all sections, and if there is a nil deductions, you have to justify why you want the nil deduction. Everything has to be in the form of an attachment. And there is no requirement to submit the documents physically, but though they are asking you to submit the documents physically because website is not being optimized fully, there is still under construction. Then it requires the projection and certified data. There is self-certified computations, projected financial statements, details of any exempt income, justify any nil or over certificate, that is mandatory, historical data for the last 4 years. Then transaction specific document. Suppose if you are asking for any document related to your sale of property related exemptions, then you have to give your purchase documents, sales documents, etc. certified. And in the near future, suppose it becomes successful in your 141 document only, your TDS working related to your sale of property, documents, etc. capital gains will be worked out in your challenge itself. Your challan, that is in case of NRIs, there is one dispute which is going whether 20% TDS has to be deducted, whether 12.5% deduction has to be deducted. That is still more confusing. Actually, the problem here is the law requirement is that actual TDS, what TDS is required, that only tax has to be deducted and has to be paid. But now it says that date of purchase, date of payment, everything, date of purchase, what is the all detail has to be captured in the system itself. In the near future, we will see that everything will come in the challenge. It will be a returns filing only. All your data will be captured in your, when you make the time payment, the time of making the TDS. You see the 141, you see the new challan of 141, what is asked for. It now asks for what is the date of agreement. It asks for date of deduction when you deduct. Everything is where what was the when you made the first payment, when you made the last payment, what is the everything is captured itself. It is just your it is asked for everything. So in the near future, everything is going to come inbuilt in the return only. So slowly, in case of NRIs, also in case of NRIs, everything is going to capture in the system. So automatically calculate the tax and working of the tax will come inside the return itself. So it will calculate the tax and ask for the tax amount only. So collect the tax itself and make the payment. So that calculate the system. So it is working on that. Then about the new concept has come about the child certificate. You might have seen in the on the portal that about the child certificate which is there. Child certificate is nothing but the mini certificate breakup of the certificate of the main lower certificate. That is, you have to issue the certificate in the part certificate. Suppose if a lower rate of certificate is issued for 1 crore rupees for any particular SST, you can break it up into parts. That is 50 lakhs, 25 lakhs, 25 lakhs. So that is one extra burden. So you can get a breakup of that certificate and you can issue it in the past. So when you get this type of child certificate, you have to ensure that while filing the returns, if a child certificate is issued to you, at the time of filing the TDS return, you have to mention the child certificate number in the TDS return. Don't enter your main certificate number, otherwise you are going to get the demand for the because you have mentioned the demand for the mentioning of the wrong certificate, because then once your child certificate number is issued, your main certificate number has already gone. So there will be an issue in that because certificate number has already changed, because the lower certificate number has changed and this is converted into the child certificate number. So this will be a mistake while filing the returns in tax year 26-27. So how you can apply for the multiple child certificates also. So that original certificate will be there. In that, the breakup of the certificate will be there. Certificate number 1, 2, 3, 4. So then the one certificate will exhaust, second certificate will be used, then third certificate. So that is the limit. So 1 crore certificate will be break up into 1, 2, 3, 4. So that once that first certificate is over, then second certificate will come, then third certificate will come, then fourth certificate will come. So that you will ensure that certificate limit gets exhausted. Accordingly, you will use that certificate. The deduction should then deduct the TDS as per the child certificate provided by the taxer and code the details of the same in the TDS statement while reporting the transaction. And to ensure that the limit of that for what you are mentioning the child certificate does not get is valid and is not exhausted. Otherwise, you are going to get the demand for the because that certificate is exhausted. Then you will get a demand for short deduction.
How many such child certificate will be issued?
Multiple up to that limit. Suppose the 100, if a 1 crore limit is there, you can have 5 lakhs 20 certificates, 10 lakhs 10 certificates, but maximum limit will be 1 crore.
Apply for the child certificate.
Yeah, you have to apply for the child certificate. Yes, you have to apply.
And with the denomination.
Yes.
But the purpose is to give it separately to a separate vendor.
No. Vendor will be same only. The vendor will be same only. Just that you can use it.
But I want what is the concept? That is mainly for the vendor.
Suppose in case teacher, suppose that certificate you want to issue, suppose that person's certificate does not get, you can transfer it to the next certificate, you can apply, transfer it to the in person. Teacher, suppose that clients, suppose that limit of 50 lakhs does not get exhausted, then you will get it transferred to the assistant officer, it is supposed to get it transferred to the next vendor. That is the purpose. Then form number 130. That is form number 16. That is form number 16. Old form number 16 becomes 130. That is new form. So here what the changes has been made. That is your allowances or deductions of perquisites has been clubbed into two parts. That is your exempt allowances and your deductions. They have been clubbed into groups. They are grouped into exempt allowances and deductions. So now your whole scheme of taxation also continues. So based on this, you have to ensure that in this certificate is exempt allowances that will be covered into 11 and your deduction will come into 19 months. So they are grouped into these funds. So as per new form number 130. And in your returns, that is 24Q, you have to see that it is exempt, it is mentioned correctly now because nobody is, I think most of the people, around 90% statistics data says that around 94% people are using software only to file the returns. Only 6% people are using UV. So this won't make much matter because tax, surcharge and sales. Only when making the payment, you have to ensure that you use the correct code while making the payment because now the code says that when you make the payment, that is 392 sections has been divided into 4 codes. That is when you make the payment to the government employees or union government employees for salary TDS, you have to use 1001 code. When the payment is made for employees other than government employees, you have to use 1002 code. Payment to Indian government employees, 1003 code. And specified senior citizen, that is why above 80 years, you have to use 1003 code. codification is most important now. Selection of correct codes is most important because again, now one question may come. If I use incorrect code, whether I'll be getting the credit or not. Right? I don't know. Because in the FAQs, it says that you will not get the credit. Government itself is saying you will not get the credit. The government has issued 21 questions FAQs. It says that you may not get your credit, may be denied to you. But now, since this is the first year, it will be very difficult because tracing system is also not working. And in future, it is all these income tax returns and now what we are filing on the income tax portal, that all system like payment of TDS, etc., slowly and gradually is going to shifted to traces. Everything related to your TDS work will be shifted to traces once it becomes operational fully. So please don't do that. Otherwise, getting the credit also when government's credit, you may get it, but there will be a long procedure because you have to visit to the get this credit, codes, corrections, etc., etc. Procedure will be there. Money will not go, but definitely there will be a process to get this code corrected. But don't take the chance. And if you want to try, you will try also. That is your luck. Then about form number 141, that is we already discussed. That is that's now a same portal access point. Then it says that in the near future, that is, it may come that the TDS assessments also may come in the near future. And it says that once this TDS assessment, except this TDS orders also has been filed, that is whatever is completed, no order can be filed. This once the returns has been filed, everything is completed. That is no order for the NRI system. The NRI after the 7 years, that is 1 year plus 6 years, that is 7 years can be passed. This can also be made applicable for this Indian SS is also 397, and in case of TCS, that is 6 years is there. And in the correction statement is filed, that becomes 7 years becomes 2 years. Once you have filed the correction statements, everything is okay. After 2 years, nothing can be done. So this is basically what was done in the old section, that is 201. As section becomes 397, 206 becomes 398 in the new section. So that is basically related to this. Then about suppose if you are failure to collect the tax and pay the tax, then tax if it is not collected till the date of collection, you have to pay 1% interest. And if the tax is collected and not paid, then you have to pay the interest at the rate of 1.5% with interest. But then again, definitely the big problem is there. Collected tax and not paid is a criminal liability because it's a huge problem, because then you are liable for big, we have to go for compounding also because that is a serious offense. Then about form number that is 14015 CB and CC, that also has been now simplified, because earlier the problem was there because what we were mentioning the codes and what bankers were mentioning the codes that Quadra was not adding. So what has been done that now if the team is there, suppose the foreign recipient, if they are holding the PAN, then you are required to mention the PAN. If the foreign recipient is not having the PAN, then the team member in their country, that has to be made mandatory. So that is the form number 145, 146 is there. So classification of the codes has been mandated. So which is there, which is in line with the form A2, which is there with the bank at the time of remittance. Because once you file this form number 145, 146, they also have to file the asset statement about the remittances. So all these codes are being aligned to that, because now earlier, if you see earlier you were filing the form number 15 CACB, there was no such options to select the code which was in line with the asset statement. So that has been made aligned, and there has been a digital integration with the statement. So a system has been made as system friendly. The address and name fields have been separated into the distinct form, but if you see that with one form number 145, there will be one form number 146. That is line. So all other things remains the same. There is nothing much more changes in that. So these things are there. Then about classifications of remittance, you have to select from that specified 65 categories of the codes which are there. All other things related to 15 CVA and CA remains the same. Then foreign, that about ITDRM, that banks which has to be remitted, that has to be seen, that authorized dealers and the banks that are part of general remittance now, they have to see that they have to file with their ITDRM. A core compliance measure of the IT department is to track that now all remittance which are going from foreign to the foreign remittance, that will be tracked now particularly. So these are the changes which are there. Filing procedures remain the same, that is ABCD related to forms of less than 5 lakhs, then there is no such requirement. More than 5 lakhs, then CA remittance, CA certificate is required, part C has to be filled up, and then everybody would be aware about that system. So that system remains the same. There is no change in that. Then about if there is no non-compliance, the penalty which was there, they should always be sent to the clients. So then TDS नहीं file होगा तो मेरा क्या कर लेंगे? So this has to be sent to the clients every time. So sections have been changed, demands and penalties, etc. remains the same. So suppose if the client is liable to deduct the TDS and if it doesn't TDS take the PAN number, then there is a 10,000 rupees penalty for that, for non-compliances. So that is the same thing. Then about other things also remains, that then the failure to furnish the PAN statements or failure to apply for the TAN, etc. There is no such changes in that. Then that 40-year deductions section which was there, and the new income tax act which has become 35 BI. So this year's tax audit, you have to remember 40 BI only. Don't convert it to 35 BI, because next year 26-27 it will be 35 BI for land. So this year tax audit, you have to remember 45 years. So changes related to tax audit, this TDS defaults, the harsher punishments has been reduced now. That is, now it has been says that TDS mistakes will focus on corrections than prosecutions. So prosecutions have been reduced now. It says that reforms have been made business friendly, fair, and ensuring that minor and non-cash defaults don't lead to severe punishment. But it says that now there will be no imprisonments if the TDS was not deducted on payments made only in kind. That is, suppose it says that you are liable with some type of non-kind payments you have made. That is, suppose 194R type of payment where there very non-payment has been made in kind. In kind also you are liable to deduct TDS, but you are not deducted the TDS. Then in that case penalty will not be there, but you have to pay the fines on that. There will be no prosecution in that case. Then digital transactions, that is relief has been given for relief for online gaming VDA given in fully in kind. That is protects taxpayers who don't have cash to pay them immediately. I think they will be in the near future they will also be start accepting something. Small defaults, that is only fines will apply, no imprisonment will be there. Large defaults, that is exceeding 10 lakhs. Even any amount which is exceeding 10 lakhs, there will be an imprisonment now. Less than 10 lakhs, there will be accepting only fines will be there. Imprisonment will be only more than defaults are more than 10 lakhs rupees. Maximum up to 2 years, earlier up to was there up to 7 years. So that has been reduced to 2 years. So this is the thing. So then suppose if the TDS is not deducted, then earlier you had the option that 26A certificate you can give it, and you are allowed to deduct the expenses was allowed, and you had to pay the interest to the for the defaulting interest, that is 201 was there. So that 26A has becomes now 149, and in case of TCS it was 27BA, which becomes now 20 form number 150. So 149 and 150 which is there. Then about that is when you are mentioning it is 121 when 15A, 15H or 15G form number is there, that has been made a common form now. So see, the form also has been combined. You have to remember other different forms. So 15G, 15H is combined to 51 form, that is 15, 121 and 141, 21 form which is given. So to ensure that you mention that unified number when you file the returns, otherwise demand is going to come. So one form, one number and one process for everyone. So this also has become simplified. Now FAQs are there, that is, they have come up with some questions they raised, that these are issues which are going to come in the future, so what should be the solution for them? There are 21 issues which have been raised, but some 8 issues are there which are important for us, so they have come up with some collections of issues. That is, it says that fundamental rule for determining which act governs the TDS application. Now it says that suppose one invoice which has been received in the month of March, and the payment has been made in the month of March. Advance has been given, the invoice which has been pertaining to the month of April, but payment which has been made for in the month of March, which act should apply? So when the payment, part payment is made in the month of March and part payment will be made in the month of April. So either 1961 Act will apply or 2025 will be applied. So he says that in 61 March 2026 you have made the payment. So March 20, whatever payment is made in March 26, 61 will be applied. And whatever payment you made in the month of April 2025 will be applied. So that is, it says that. And suppose if the deductor by mistake has quoted the old act in the challan. Suppose now by mistake, you have made the payment 26-27 in April 26-27, you are making the payment, and by mistake you have mentioned assessment year 26-27, whether you are going to get the credit or not. The government says, I don't guarantee that you will be getting the credit. So now you will be very particular that whether you will be crediting the credit, but I assure you that you may get the credit. You will have to pay the loan because nobody can take away your money. But see, if you have made the payment, see that while doing the audit, there will be some defaults of TDS. Try to adjust that default and don't wait the refund. But you have the option to claim the refund also. But the conditions are there that when you apply for the refund, there is a long procedure to get the refund. But if that money gets adjusted, try to adjust and don't wait for the department to get that money back. And if that amount is small, don't wait your time and your energy to get that money back. If it is getting adjusted in the last year, adjust it and finish it up and get this cleared. So that was the one thing. And due dates for depositing the TDS, that is, everybody knows it. That now this thing April 27 onwards, April 26 onwards, due dates are also the same. There is no change in that. Then about one big mistake which is happening about the rent TDS. People are making big mistakes. That is rent TDS. That is 50,000 above rent. They are making the payment every month. You are required to make the payment at the end of the year, or when the property gets your rent agreement gets expired at that time. And the problem which is happening is, so see that you make the payment, you collect the payment and keep it as a fixed deposit or etc. or collect it but make the payment at the end of the year. So don't make that mistakes. Then about TDS to deposit we already discussed, but if the expenses have been booked, yeah, please.
I have a client who has a tax audit applicable to, and he is paying rent more than 50,000. So we should go under the normal provisions of that ordinary code, or we should take this provision.
Rent payment is of the residential property. If it is there, residential, then it will be as per the 50,000 rule will apply. Then one biggest change which has happened is in case of a non-residential payment, that is if you are paying a salary to the non-resident employee. If I forward to them is highlighted to the good way, but I remember it was in case you are having a non-resident employee and you are making a payment to a non-resident employee. From this tax year 26-27 onwards, you have to see that the payment is made prior to 31st of March. Then only you will be getting the deductions. Otherwise, you will not get the deduction. It is only for the non-resident employee, and in case of salary, you will not to others.
Sir, the salary is, any limit is that the salary is pure by tax?
No, it will tell non-resident, there is no such thing, sir.
Any payment, not for any payment.
Or non-resident employee, only for non-resident employee.
Any payment, any payment for 31st 2026, whole year, whether 20 year or next year.
Sorry,
Payment made in April 2026 or March 26, over year, on rent, on residential house.
If it is made on the whole year, it is made, then it's, you can make the payment, because that is to be made in the March only, not now.
If it is delayed, then the assessment year is all right.
Mentioning assessment year is all right, or it has to be mentioned as.
Tax year only. If it is paid in April 26, then it will be tax year only.
It is based on payment, whether it relates to the
Yes,
year.
yes, yes.
Okay, thank you.
Then about the TDS returns, last year's TDS returns, that is financial year 25-26, you have to file 24Q, 26Q, etc. And you have to issue to 16A, 16B their form from April 26 onwards. That is first return. The first return will be going on 31st of July, if it is not extended. And website gone properly. Your returns will be in the new form, and your new TDS returns, that is form 130 will come, your new TDS certificate will come. And one thing is that it says that whether your new utility, suppose now if your mistakes comes, you will have to file the correction statements also. No? Government says that you are going to come with a new utility which will comply with these returns. It will act, it will accept your 160, 1961 return also and 2025 returns also. It says, भाई सरकार बोलती है तो मान नहीं, घर वाले बोलते तो मानने का, सरकार बोलती है वो भी मानने. So now this is the codes which are there. These are the so many codes. So now if you see the codes which they are added, you have to select these codes properly. Say rent, if you see rent, how much they are added? Rent, individual HUF, rent, plant and machinery, rent, land and building. In TDS rent also there are how many codes are there? Rent, transfer of immovable property, the development, joint development agreement, the codes which they have done, codes which have continued. Now, if you come to the next codes, TCS codes, now you come here for foreign remittance. See, the foreign remittance is for foreign tours and travels. Exceeding 7 lakhs rupees, there is a separate code. Less than 20 lakhs, overseas tour programs, exceeding 7 lakhs, different codes. So this is just to see that they are going to track each and every expenses. This is just for tracking all your expenses. Then refund of excess TDS. By mistake, you have paid excess TDS. The refund process also remains the same. There is no change. But it says that to recover the extra TDS paid by mistake, you have to do the duplication. You can apply it. Wrong challan details, duplicate payments, over deduction of TDS. You can apply filing process to traces. After CPC TDS processes the statements, deductors information, etc. process is the same. See, this is the form. This is the entire process. You can go through this. So this will be the position of the TDS. Accountant setting, managing the TDS, your total stress resolved. So TDS is no longer just a deduction, it's the compliance treasure. Everybody is covered. It looks about away. So some moments, though one TDS, but your journey should be memorable. So thank you very much. So this I tried to cover in the best possible manner. Everything. One thing is that if you want to see, I'll just show you. This will help you in your tax audit. If you want to see, just give me 5 minutes.
No question.
Yes, please tell me.
Earlier, you could file one tax challan for all the codes together, for all the sections. Now, as there are different codes, you will not be able to do it.
In one TDS challenge, you can use up to 20 codes. It is permitted now. Codes will be separate, but you have to see that for corporate tax payment and for non-corporate payments, you have to use separate challans. Don't use the common challenge.
Earlier, could use one challan and use it for
Same as your codes should be separate. Challans can be same.
from the new rank also. Okay.
Yes, please.
Sir, actually, any mistakes happened in the TDS form from 138 to 114. Earlier, I think there was a provision, but now also, can we make any correction in the TDS form, like from 138, 148, if we have done any mistakes that?
Still now nothing has come.
Okay.
Still now nothing has come. FAQ says nothing, we are not going to come, but it has to come.
If suppose any resident status has become resident, non-resident, corporate tax, because lot of mistakes are happening, but there is no provision for the correction.
So right now, I don't know. It has not come. FAQ says nothing but.
What happens, sir, if someone,
See, in that case, see, earlier the provision was that you would have to go to the assessing officer had the power. See, if something happens now, there is a circular, old circular, I think 2017 or 18 one circular is that as once if some mistakes happens, bank has the power within 3 days, they can correct the challenge. You can refer to the bank immediately, within 3 days, they can change the codes, you can refer to the bank immediately now. Immediately they will be able to.
TDS form, sir, TDS form, like form 138, form 40. Form,
Which
TDS form? 138, which you file a TDS on mobile property, with TDS that are also be form, earlier it was.
That correction will come, that will come, it has to come, it has to come, that has to come. That will come.
So it will be related to test, sir.
Yes, everything is faces. Right now, website is under development, within short time it will come.
So we can make the correction.
Yes, it has to come, definitely. Yesterday, yeah, please.
The same requirement is there or?
Till 30th September it is there, no? 1st October it is going to change.
Till 30th September, we need to apply to the time?
Yes.
Okay, thank you.
How many of you are doing the tax audit? 34A you are preparing it, how many of finding the difficulty in doing the preparing 34A? Which one? See, this is one utility. This gives you your 34A working prepared. What you have to do is, whatever TDS written, TCS written, what you have filed. No, not FU. Your TDS, TXT file. This gives you entire 34A prepared. It will be helpful, it is helpful for income tax returns. Then what is the party wise deductions, what is this? You can download it in your Excel format, JSON format, PDF format, what is there. This gives you the section wise summary, everything.
Where these utilities available?
This is, I'll share it with you.
Thank you.
So this it gives you everything. All your 34A working is readily, only you have to just verify. You can download it in PDF, you can download it in Excel, whatever you want it. This was what just, I have done this AI level 2 course recently. What happened, we had a project, we had to prepare one thing, that you have to prepare one software. I was just preparing, I wanted to prepare something, so I prepared for my purpose. I have done this. That is our thing, that something should be prepared, so I prepared it for my purpose, my thinking I did. So this report, see that it gives you in a PDF format. So this is the section wise, these are the deductives, these are the total taxes, this is the amount which has been paid. So if you want it, I'll send it with you.
Please do that.
Huh?
Please do that.
So this is just I did it for my study purpose, that is what you think. So you want it, I'll share it with you. So this will be helpful. This will be helpful for doing your tax audit work. So this you can just put your TXT file, all the last the 4 returns, TDS, TCS returns, all you can put it in this, they will give you a 34A fully compiled report.
कैंसिल कर इसको कैंसिल कर कैंसिल कर नाउ मीनिंग ओके
Thank you very much for your patience, listening. Thank you.
Thank you. So still so many persons are available. So one or two announcement again. In July, we are planning to have an information campaign here. So as of now, technically second week of July, but date may be 1 week here and there, subject to arrangements and other things available. And today, there is a storm of Chandra viewers. So after your bargain price, you go bargain, after your bargain price, they are giving you 2% discount to change figures 1% all of your bargain price. So thank you, Avinash sir, for such insightful topic and interactive topic, making complex things understanding in simple way. Requesting our deputy Bharat Bhai to give you a formal vote of thanks.
Thanks, Jume Study Circle, for giving me opportunity to give vote of thanks to the next speaker, Avinash Ji. With a lucid way, he has explained so many in detail provisions of the TDS in a new act, as well as the way in which he has explained. It is fruitful for all the members. Let us carry it with loud applause. Thank you. We conclude the meeting.